So I'm here just to talk about two things. It's a very, very brief presentation. I'm hoping to talk about to introduce Lockton as a company and also AmTrust as a surety. And essentially what I want to talk about, I hope you can all hear me, is performance bonds for principally building contractors. So what we're doing is we've identified that there's a need for additional requirements or additional capacity, similar to what John is talking about there, to try to get projects started. There, a lot of people are struggling with actual performance bonds. So I'll kick on. So in terms of my name is Aidan Brady and I'm the sales leader of Lockton. We were founded in 1966 by Jack Lockton, world's largest privately owned insurance brokerage firm. So we're in 64 countries looking after clients. So Europe, Middle East, Latin America and United States. Premiums placed 20 billion annually revenues of 1.25 billion. So we've 6,000 associates strong. Myself and Damien are in here today, so we'll be able to hand out some of the leaflets. Where corporate headquarters is Kansas and international headquarters is London. So in terms of how we fit into this, Lockton are the leading general insurance broker in Ireland. We've got offices in Dublin, which I'm in, and Belfast. We've 100 associates servicing the market and we're placing 100 million in gross written premium. So the areas that we specialise in are construction, real estate and professional indemnity. So construction is bonds or owner control programs for big developments. Real estate would be a lot of the funds we look after, the likes of Goldman Sachs or Carvel, that come into the Irish market. And professional indemnity, we specialise with lawyers, professional indemnity including Le Mans, and we also do insure all the other insurance brokers in Ireland. So the surety bonds protect their acceptors against contract default, insolvency or proven non-performance under contract. The big thing is probably insolvency. That has been the big issue over the last number of years. So other bonds that we can hit on today are advance payment bonds, and I'll give a brief description of these: supplier payment bonds, retention bonds and rent guarantee bonds, which are all interesting, but some of them aren't bought too frequently in Ireland. So I suppose I'm not going into a massive amount of details on bonds because I figure that if you're in the market that you already buy bonds, you already know about them, and if you don't, the brief synopsis that I gave will be enough for you to be able to work through it. So in terms of the marketplace, we have relationships with the existing bonders, be it Euler Hermes, Allianz, HCC and Construction Guarantee. We were actually founded by a surety underwriter, Jack Lockton, in 1966. And in terms of the overall global size, we're the largest global surety broker. So we've had a 1% loss rate in the last 5 years. So we have a good vetting system in terms of, or you could call it luck, whichever you want, but we haven't hit the mark with many claims. So what are performance bonds? And this is just a very brief description of them. They're discretionary inclusion in construction contracts that require performance bonds made by an employer prior to the tender process happening. That's why you'll know about them if it is a requirement that you need them. And it involves three parties. You've got the employer who specifies the type of wording that they want and that they need a bond. You'll have the surety, which is the bondsman, and you'll have the contractor. And in return for a fee, the surety agrees to provide protection for the employer against contract default by the contractor. So the bond is a guarantee given by the surety in the event of default or breach of contract by the contractor in the performance of a construction contract. They will pay the damages to the monetary level of the bond. So the contract of a guarantee, and it's not a contract of insurance, and that just simply means in insurance you insure your principal property or whatever else it might be. In terms of a bond, it's different. It's a guarantee. It's closer to a financial guarantee. It's underwritten on the basis of a contractor's financial skills, their experience, their skill at completing similar types of projects, and that's the big thing that the underwriter is looking for. So the ability to complete can arise from any reasons, but the main one is insolvency. That's the one that they're looking at. They're looking at the financial strength, and obviously contractors over the last number of years have been badly hit, and that's the challenge that we're all facing. That's why I'm here today. So the maximum aggregate limit guarantee will be specified under the wording will be generally 10 to 12.5%, and them amounts came from back in 2013 in the midst of the recession. The bonding in Ireland was at 25%. So what was happening was you had a million quid contract, you had to have a bond of 250,000. It was eating up all the capacity, and very quickly bonders ran out of markets to deal. And so they brought it back in line with what you have in the UK, which was a 10% bond. The public contracts now range from up to 500,000. They've zero requirement for a bond. Above 500,000, it's 10 or 12.5%, and then above 10 million, it's 10%. So it frees up some of the capacity. If it didn't happen, we'd be all in big trouble. So a snapshot of what happened in the market. The surety market severely contracted since the financial crisis. So a number of firms went into administration or receivership or insolvency. The bonds were all called in. That's on the standard performance bonds. The development bonds, obviously, you had half-built estates, and where there was bonds, they were called in. So you had a mass exodus from the marketplace, which meant that the main three markets that stayed consistent are HCC, Euler Hermes, and Construction Guarantee, and they're providing capacity at the moment, but they can pick and choose who they want. They don't have to write every single risk because there's very few of them doing it. Allianz have a sister company called Euler Hermes, and they kind of essentially left and let Euler Hermes do it. Aviva have a limited appetite, if any. They're essentially gone. And tying in with John's thing, like a recovering market, if we don't have more capacity, contractors can't bond, and if they can't bond, they can't get going. So that's what we're here to try to do. We're providing contractors with this new option from AmTrust to give additional capacity and to ensure most competitive pricing in the market. So the big thing of it, where it's then, well, we had a few contractors that were turning over considerable amounts in top 5 contractors in the country, and they needed additional capacity. They were running out. The existing markets are excellent, like the HCC or Construction Guarantee, but as soon as their limit, the more bonding they give out or more capacity they give out, the higher the risk is for them of the contractor going bust. But they can't really jump off either, because if they did, it could force the contractor to go bust. So inevitably the price goes up. So what we identified was that a contractor needs to have a few options, and strategically be able to place his bonds with a number of different markets. That's the premise behind it. So we entered into a relationship with CHJ to underwrite these bonds for AmTrust. We should be able to deal with the majority of contractors in Ireland, albeit it is an A-rated market, so we have to underwrite it similar to the others. So it's additional capacity, but we do the same vetting process. AmTrust are one of the largest insurance companies, and they're A-rated. So it's going to be accepted by the public and private sectors. There's no problem with that. And the wide range of bonds, including performance, advance payments, rent guarantees, and development bonds. Development bonds are still a big challenge. So just a brief description of the bonds. Performance bonds I've just touched on, essentially a guarantee by the surety to an employer. In the event of default, they'll pay the amount of money that's on the bond. Advance payment is where a client agrees to make an advance payment to a contractor. Again, the bond steps in that if the contractor defaults, they'll pay the client. Retention bond is what it says. It just replaces the need for the retention under contract, that in the event that you don't want to tie up your cash flow, the bond steps in as if it was the retention. So if the client defaulted, the surety pays that premium. The rent guarantee bond can replace a rent deposit and can be provided by a bond. That's a big thing at the moment, where you see some of the IT startups that have great business plan, but they mightn't have the big balance sheets, and they're going in to buy these high-profile properties, and rather than tying up all their capital, they can come in on these products and basically replace the cash deposit they would have done with a bond. And there's also an option for the landlord to insure against the tenant defaulting on the lease in a specified period. So the bonding process, I'm just wrapping up now. The initial contact is made with ourselves. The inquiry is completed. We do help as much as we can with the inquiry process. It's not like an insurance product. It is more like a financial guarantee. So in terms of, we do need to get all the additional information, audited accounts, management accounts, bank questionnaires. So there's a bit of information that goes into it. But we will help through that process 24 to 48 hours once the completed application is in. And we will make recommendations to include security. So there is collateral required in a lot of instances, especially where you've got depleted balance sheets. So the draft bond is prepared for client approval and payment made. They have to be paid for in advance. So just in summary, we have access to all of the underwriters in the market. AmTrust is just another option, but they will be accepted by everybody in the private and public sectors. It's competitively priced, or it's going to ensure that you've got options on the pricing. It sits harmoniously with the other bonders you have at the moment. We're not trying to replace anything. Dedicated account handlers and likes of myself or Damien will be looking after you. And we can look at most bonding requirements, as I said, performance, advance payment, rent guarantees. So that's it. If someone would like to come meet us, we're at stand 85. We'd be delighted to talk to you. But that's me finished. Is anyone questions? Okay.